January 14, 2014, current time 11:35 GMT. This is Jay Meisler with the Global View GVI Forex daily video market update. I think the best way to describe this market is if the market was a drug addict, the drug of choice would be economic data, but certainly is hooked on it. The rationale for trading short term based on expectations of when the Fed and the Bank of England, for that matter, might raise rates in the future, whether it's mid 2015, late 2015, early 2016, escapes me, but that's the way it's trading. There's a little more rationale to economic data affecting the tapering, although, as we've been pointing out, the Fed wants to get out of the taper, so it's going to look for reasons to do so. At the same time, emphasizing its forward guidance that it's in no rush at all to raise interest rates. Looking at the price action today, we've had some give back in the yen after its recovery since non-farm payroll. Euro dollar came within a pip of testing that 137 level as it continues to confound. If you look at a daily chart, the 20-day moving average, which comes in today at 136.79, capped the upside 2 days in a row. Today briefly came through it. So the close versus this level is important. But most important is probably this gap, which we show at 137.22 to 55. That is, that was pointed out on GVI Forex today by Flip that the gap probably doesn't exist on some other charts, but on broker charts, it does exist due to the time they open for the new year. So if this is the case, then I say mind the gap because enough people will be trading on it. If we get through 137, it's going to try to fill this gap on the downside. As I pointed out yesterday and again today, when we trade between two big figures, the 50 level is the bias setter. That comes in around 136.50 today, and the low today was just below at 136.48. So 136.50 is going to set the tone while within 136 to 137. The 20-day moving average is important. You can see on the 4-hour how the 100 and 200 are converging, showing how this market has lost its momentum. If you look at the 1-hour chart, the key levels here for today are at the low at 136.48, which needs to hold to suggest we have upward momentum. Yesterday's low at 136.37 is the other key level. You can see here the 1 and 200 hour moving averages are converging. The 200 coming down, the 100 coming up to meet, which is below the market. Look, they're going to meet around this level here. And that's it for now. Today we have retail sales coming out of the U.S. As I said, we're in this data-dependent market. How the market followed through after non-farm payroll, given that there was probably some weather-related distortions to the data, shows a market that has been squeezed more by positioning coming into the new year than big bets on trends at the moment. I think the market will be hard-pressed to give up the yen unless we get below the bullish part of the yen, unless we get a below 102, but needs 105 plus again to build momentum on the upside. 165 is the obvious level in sterling on the upside. And the euro dollar, we're looking at 137 at risk as long as 136.50 holds. If 136.50 gives way, then that range is back to 135.50. So that sums it up for now. Watch 136.50 sets the bias, but when upside's capped unless 137 is taken out, and at which point if it is taken out, we're going to try to fill that gap. So just know we're still in the sparring march. One more thing, we're in the sparring period as the market reliquefies for the new year and tries to figure out what are the paths of least resistance and the trends for the new year coming up.